Thank you for joining us for our initial due diligence video on Pitney Bowes Incorporated, ticker symbol PBI. Again, in this video, we'll do our standard initial due diligence to try to decide, is Pitney Bowes, ticker symbol PBI, a stock we want to buy now? Is it something we want to put on our watch list? Or is it something we want to avoid at this time as of July 17th of 2022? So again, please stick around to the end of the video and we'll draw our conclusions based on all of the data that we gather in this video for our initial due diligence on Pitney Bowes Inc. So thank you again for watching and stick around for our conclusions at the end. We hope this all helps. So let's take a quick look at Pitney Bowes homepage, and I'll put the direct link to their homepage in the description box below. We can see they're highlighting that they're an e-commerce, shipping, mailing, financial services company. You'll see they're again marketing that they're one of the best employers for 2022 from the Forbes. So, positive PR. You can see their shipping and mailing, financial services, other resources, communications, etc., postal. Again, Pitney Bowes been around for a long time. We remember them from, providing mailing machines for direct mail, etc. You see now they're highlighting their e-commerce operations, their shipping operations, and also financial services. So you can see again new e-commerce logistics. So again, they're stressing they're trying to reinvent themselves for the world of e-commerce, shipping. If you're running a e-commerce store, your own gig, etc., Etsy store, Amazon shipper, Shopify, etc., you have to do a lot of your own shipping. So this may be an attractive opportunity. So client success stories, etc. So then we see, about, etc., ink and supplies for meters. So they, still mailing meters, and again, that's what we remember them from. And then bill paying, etc., accounting, postal stuff, business services, parcel tracking, and partnerships, etc. And it looks like then they've got also some developer and some APIs. So that's interesting as well. And they've got a decent social media presence. So again, it looks like this company's been around for a long time, and it looks like they're trying to reinvent themselves for the new current economic situation in the new world. So let's dig into our due diligence and see if it's a stock we want to buy. Okay, let's do our due diligence on Pitney Bowes Inc., ticker symbol PBI in ChartMill. I'm on the profile for Pitney Bowes in ChartMill. I'll leave the direct link to this profile in the description box below. We can get an overview of some of their ratings. We see right now, as of July 17th, 2022, their technical analysis rating is very poor, 0. The setup's kind of average. Fundamentals kind of average, growth average, valuation average, profitability, health is a little below average, dividends a little above average, and we can see their profile, technology company for the commerce industry. They're in Connecticut, financial services, etc. They have global e-commerce, parcel services, etc. So, and then physical digital mailing. I think that's where people are probably most familiar with them, is from their old mailing and mailing machines, etc. So let's dig deeper. Okay, if we look at the stock chart of Pitney Bowes in ChartMill, we can see it's been declining. It's running below its moving averages. It looks like it's testing the bottom of this trend line, although it does look like recently it may have stabilized at a bottom. So let's zoom out a little bit. Look at the weekly. So here on the weekly chart, we can see it's in an upward channel. Looks like it's a triangle or a pennant. It looks like at one point, You know, it tried to break into that, bounced off the bottom trend line. Again, we see some potential bottoming formation. The previous low is somewhere around this 250-ish area. So again, and then we can see a resistance level around 8. Again, if we zoom out further, we see it's running below its moving average, although it looks like, again, maybe a possible bottom formation around this 4 level. And then we've got another, the bottom, historical bottom, at least for the past number of years, going quite a ways back, is somewhere, you know, below 2 area. So from here we can see a reasonable risk reward, the risk about 2-ish. And then we saw that resistance level about 8, so we know reward potential 8 and above, risk to 2, so it's the 2-to-1 risk to reward ratio, which is something that we always look for, and that seems relatively attractive right now. Okay, let's look at the technical analysis for Pitney Bowes in ChartMill. You can see it has a technical rating currently of 0, very poor. We can see these short-term, the weekly. Again, we see this upwardly sloping trend line, and then this resistance at 8. And then for daily, so the near term is negative, and the longer term may be relatively positive. We see it's got good liquidity, good volume. We see the setup currently 5 out of 10. We see the negatives. Okay, so again, the short term is negative. It's underperforming its commerce services. It's trading near its 52-week low, bear flag pattern. And again, it's trading below its averages. So again, we can see from a technical analysis standpoint, in the near term, it is not very positive, but in the longer term, it may potentially be more positive. Okay, let's look at the fundamental analysis for Pitney Bowes in ChartMill. We can see it's currently a 5 out of 10. It's got a dividend. The health and valuation aren't great. It seems relatively balanced except for its dividend. So let's look at the profitability. Again, average. It's got decent return on equity. Again, everything else is pretty average. Valuation, again, average. Price to earnings, average. So in general, it's average. The only issue here is its price to book is a little below average. Growth-wise, again, average, and it looks like it's relatively flat. EPS looks like it declined. Looks like it may be declining in 2022 a little bit, and bottoming in 2022, and then increasing going forward. So again, the longer term view for EPS looks a little more positive. Revenue is a slight growth, but pretty flat. They say it's showing negative, earnings per share growth. So Altman Z, the health score, so solvency is not an issue. It's got a good Altman Z. But current ratios, quick ratios, and it's got, so debt is its issue. It's got a 4 out of 10, and but it's still paying a good dividend. So it seems like they're pretty committed to their dividend, although we can see it's been cut over time. So that's a little bit of a negative. But it seems again that they're committed to their dividend because they're paying that even though they have debt, and they've cut it, but they're still paying. So it's dropped. So that's an issue. And as we can see, they're paying out a pretty high percentage of their income to dividends. So again, what we're seeing is they're committed to that dividend, and that potentially is hurting their business. But again, that's positive for dividend investors, stockholders that are interested in that dividend payout. Okay, if we look at the analyst ratings for Pitney Bowes in ChartMill, we can see it's got an 80% buy consensus. We can see analysts have a mean price target of 663, which is almost 80% above its current price. So positive, very positive upside. We see 3 strong buys, 2 buys, and 3 holds, no sells. So again, analysts are relatively bullish. It looks like the analyst ratings are relatively stable, pretty flat. It's kind of light, 8 analysts, so it's not heavily followed. But again, the few analysts that are following it are very bullish on Pitney Bowes. Okay, if we look at the ownership for Pitney Bowes in ChartMill, we can see a high degree of institutional ownership, 66%, 33%, public retail, and a very small insider ownership. We can see float shares outstanding relatively the same. Institutional ownership has been relatively stable. We see a few positive insider transactions. So again, generally positive, and the high institutional ownership gives it some level of stability, as institutions are less likely to sell at the drop of a hat. Okay, let's do our due diligence for Pitney Bowes Inc, ticker symbol PBI and Seeking Alpha. And again, I'll leave the direct link to this profile and Seeking Alpha in the description box below. So if we take a quick look at some of the recent news, so they're going to buy Global E Online is acquiring a border-free business from Pitney Bowes, so that should help their debt, help their balance sheet. You see it's paying a 5.5% dividend yield, so again, attractive dividend, upside potential, sales growth, 4% dividend. So again, looks, seems like they're committed to their dividend. That seems to be the attractive piece for this. And here's a statement: it's healthy but overvalued. So we saw the valuation was one of the negative points earlier. So if we see the ratings, so mostly buys, quant sell. Again, we saw the technical analysis rating was poor. Valuation B minus. So growth, they're giving the growth an F. Profitability's average C. See the annual revenue growth is relatively flat. So again, not a lot of growth, and the quarterly looks a little flat too. Earnings per share, again, we see that dip for Q2 of 2022, and then a potential recovery into Q3 for the quarters. So annually, so again, we see a dip in 2022, so the near-term outlooks are not very good, but longer term in 2023 looks like we might go into a recovery. So looks like this is, potentially a turnaround play. Looks like it's declining, could decline further into the end of the year in 2022, and then a potential turnaround in 2023 is what I'm seeing in all of that. So again, we see the valuation. PE is, it's not super high, but it's not also super low. I wouldn't call this a value stock at this point. Net income profitability is okay, decent. We see it's a decent sized company, 640 million. We see it has a ton of debt. So there's where we see what the issue is. 2.5 billion in debt. They do have, a decent amount of cash. But again, what we're seeing is, even though they have a lot of debt, they're paying a 5.4% dividend. So again, those things say that that dividend could be at risk, but the board seems to be very committed to continue to pay out their dividend. Looks like they last announced a 5-cent dividend, and the last payout was in June, last ex-dividend, so it's a quarterly dividend. Pretty light volume, 1 million, so it's pretty light volume. You see they've cut the dividend over time. So again, the dividend's at risk given the amount of debt and the health of the company. Again, we see this high institutional ownership, 70% institutional, very small percent insider. Not really any kind of short squeeze candidate, very small amount of shorts. It's got a little bit positive beta, so it's going to move with its market a little bit faster than the market. Again, Altman Z is positive, so solvency is not really an issue. And again, technicals are generally poor. So income's positive, EPS is positive. Cash is all good. It's the debt, the huge debt, which is a major issue. Debt to equity is huge. That's the issue with Pitney Bowes is their debt, and we saw that they're selling a piece of their business, and that should help them at least reduce their debt for the time being. They lose a little bit on investing, but it's got positive free cash flow, which is good. Again, and there's the issue is all the debt. So that is the negative, but again, it looks like they're selling off some assets to reduce their debt. We'll have to see if they do in fact pay down their debt and try to alleviate any of those issues. And again, one of the risks is do they cut their dividend further or eliminate their dividend? So okay, let's do our due diligence on Pitney Bowes and FinViz. This is the profile for Pitney Bowes and FinViz. I'll leave this direct link to their profile in FinViz in the description box below. We take a quick look at their chart. We can see it's in this downwardly, short term, it's in this downwardly trending channel, kind of bouncing off the bottom trend line. We can see it's got this pivot point around 425 or so. And again, we see it was trending below its moving averages, and it looks like it's trying to break out of its moving averages. So let's zoom out to the weekly. So here again, we see this potential stabilizing bottom. It looks like it's potentially bottoming at this the bottom of this previous candle around here, which was about 350. So right now the low was 353. Again, it's trending below its moving averages, but it looks like that may have got a stable bottom there. We can see potential downside down to about 167, so maybe 130, 140 downside. We see some resistance up here around 820, so again we got a $4 upside, a less than $2 downside. Better than a 2-to-1 risk to reward ratio. So again, that's what makes it attractive, which is why we're looking at it. So that looks positive. We zoom out to the monthly quick. Again, we see this potential bottoming, almost a doji, possibly a doji on the monthly. Again, downside is maybe that 167 was the bottom. And then we've got that resistance at 8, and in the past, it has significantly more upside in the longer term future. So if we quickly look at the metrics, we see they're making money. Cash per share, actually, and I believe this is why it may have popped up on one of my screeners, is it may have been close to trading below cash. You see it's paying a 5.4% dividend, so it is optionable. We see not a lot of short, not a lot of discrepancy between the float and shares outstanding. And again, here's the big issue with Pitney Bowes is the huge debt. So again, that's the issue here. So if we quickly whip through and see any positive negatives. So insider issue. So it looks like an opening of a facility. Earnings, they got positive on their last earnings. And again, earnings been mixed. Their reaction to earnings been mixed. If we look at their financials here, the revenue again looks pretty flat. EPS, it was negative and went positive, so that's a little positive. Look at the quarterly. Again, revenue's choppy, and EPS is positive, so that's good. And we can also see again their profile, similar information, postal stuff, commerce stuff, shipping stuff, etc. Okay, let's do our due diligence on Pitney Bowes, ticker symbol PBI, and Webull. I'm on the stock screen of the online version of Webull. We can see the 1 month chart here. You can see I've got a price target line around the 340, 345 area that seems to be a longer term support area. We can see it looks like it's kind of bottoming, might be turning up. If we zoom out to the year, and then we can also see the ex-dividend dates, etc. So again, looks like, you know, we might have a consolidating bottom there. If we zoom out even farther, again, we can see that long-term support line there. So if we look at some of the financials, again, a nice thing about Webull on the stock screen, the lower pane, you can pop up, and I like these graphs so we can see their financials. So we see actual versus estimates. So they beat last time, they missed the time before. An income balance sheet, again, positive. Cash flow, again, kind of choppy, and financial ratios, not a lot of data. Income statement. So again, their net income is positive, but declining. Revenue from Q1 was very good, and it looks like a short-term decline in Q2 or Q1. Again, operating income, it was a little negative at one point, and now it's positive and improving. Looks like they are decreasing their total liabilities is positive, given that we saw their debt was the issue, and their debt to asset ratio is reducing, so that's a good sign. Although we see their cash flows going down, so they had a nice, it was increasing into Q4 of 2021, and then it went down, so their operating cash flow. Investing, it was negative, went positive, and the financing was negative, went flat. So again, we could see all of that here. We'll see the analyst ratings here in Webull. So here it's only showing 4. Strong buys and holds. So we can see, you know, the high is about 8. Okay, institutional holdings is showing some increase, some decrease. So again, about pretty stable. Mixture of orders, and it probably is in quite a few ETFs. So and press releases, corporate actions, we'll see. You can find the ex-dividend dates in this corporate actions tab in Webull. That's very helpful. So we can see the last ex-dividend date was 5/20. You can see they've been paying out about 5 cents a share for quite some time. It is optionable, so that's a positive. And then again, your profile, etc., which will be consistent. So again, you know, we can see potentially a bottoming action here, and a little recent turn up, and we can see, you know, a decent risk reward profile. We can go up to 4. And then 570 or so. Okay, based on all of our due diligence as of July 17, 2022, what are our conclusions as to, you know, is Pitney Bowes, ticker symbol PBI, stock we want to buy now? Well, what we saw is it's been in decline. It looks like it's potentially bottoming. It may be turning around. And it does pay a nice dividend, although that dividend may be at risk due to their high debt, but they seem to be selling off some assets to address their debt. So it does look like a turnaround story, and it does look like it's nearing a bottom and potentially turning around, turning back up. So my conclusion right now, and again, this is not financial advice, this is just for educational purposes only, but based on all of our current due diligence as of July 17th, 2022, it looks like PBI Pitney Bowes is a stock that's worth putting on your watch list. If it is bottoming, turns up and starts to break to the upside, PBI might be a good buy for a long term. Again, some of the risks are listening for cuts in their dividend, if their revenues decline for some reason, or if there's any other headwinds, etc., and their debt, if that becomes, if they have interest rate sensitive debt and raising interest rates puts additional pressure on Pitney Bowes, those may be negatives and cause you either not to buy or to get out. It is also potentially a decent long-term investment because it does pay that dividend, and it does look like the board is committed to hold that dividend, although it's been decreasing. You know, it pays 5.4 some percent, so you're getting paid to hold even if the stock does not trend upward very quickly. So again, this might be a decent long-term investment, long-term hold. Again, the risks are that that dividend could get cut or could get eliminated at any point in time. So again, it's something we're going to put on our watch list. If they're not a positive opportunity, if it's at a support, turns up, we'll probably buy a chunk of Pitney Bowes, hold it. You know, we can collect the dividend. We can also sell covered calls against our position and generate our own dividends. So again, this would be a longer term hold, potential investment as long as it's trending up and their debt does not become burdensome and they cut their dividend. So again, we hope this all helps. Please let us know in the comments below, in our Discord and our Facebook group, you know, what do you think of Pitney Bowes? Do you hold Pitney Bowes? Do you think it's something that you would buy now, etc., or do you think there's a reason that we didn't discover as to not buy Pitney Bowes? So again, let us know what you think of all of this information in the comments below. We hope that you like this video. Please smash the like button. Please subscribe to our channel if you're not already a member of our BeachBum trading community. We hope you'll choose to join us. Subscribe to our YouTube channel. Join us in our Discord, etc. Please also let us know how else we can help you succeed in your trading career. So we hope this all helps. Good luck and have a great trading day. The content of this video was produced by BeachBum Trading. We hope you will choose to also join us in the BeachBum Trading community and subscribe to our YouTube channel. Visit us at our homepage at beachbumtrading.com, the bum without the U. Similarly on Twitter, BeachBum Trading, bum without the U. On Facebook and in our BeachBum Trading Facebook group. Please follow us on Pinterest and on Instagram. All of the links to our social media sites will be included in the description box below, and we hope you will choose to subscribe to our BeachBum Trading YouTube channel and follow us on social media. Thank you. We also cordially want to invite you to our new BeachBum Trading Community Discord server, where we can have discussions on all topics related to trading, success in trading, investing, etc. You can see alerts when we make trades, changes to our watch list, etc. So again, please join us in the new BeachBum Trading Community Discord server. You should be able to find a link in the description box below. You can also find a link in the social media category on our web page, beachbumtrading.com, without the bum without the U, and also in the link section on the About page of our YouTube channel, etc. So again, we look forward to seeing you in the BeachBum Trading Community Discord server soon. Wave and say hello. Thank you again for watching our video. We hope that you liked it. If so, please smash the like button, give us a thumbs up. If you're not already subscribed, please consider subscribing to our BeachBum Trading YouTube channel. Please share this video with your fellow traders and friends. And please give us your feedback and any recommendations for improvement in the comments section below. And let us know what else we can do to help you in your trading career. Thank you again, Good luck and have a great trading day. If you like this video, we hope you will choose to subscribe to our YouTube channel by clicking on the box in the upper left-hand corner. You can watch another video like this by clicking on the box in the lower right-hand corner. And we have a whole playlist of videos like this that you can access via the box in the upper right-hand corner. Our latest video is available in the box in the lower left-hand corner. We hope you like this and have a great day.